Ohio. All right, happy Tuesday. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Why plan trades? Well, it puts you in control of your behavior. You can't control the market, but maybe, just perhaps, you can control your behavior and maybe therefore get more consistent results. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I'm a currency trader like you. I've been doing this for a very long time. Before Forex, I was a venture capitalist. Before that, a high-tech entrepreneur. Before that, I worked in the nonprofit organization for several years. Made my way up to the board of directors, which included George Soros, the president of AT&T, the vice president of General Electric, the vice president of Arthur Andersen, representative from the United Nations, and, little old me at 21 or 22 or whatever I was. And before that, I worked at NASA. Yeah. Interesting, huh? Actually docked the space shuttle. Well, not me. I was a captain. But anyways, we docked the space station docked the space shuttle at the International Space Station. Sounds pretty cool. But the truth is we crashed it. We crashed it 7 times in a row. It exploded and burned up in space, if you can actually burn up in space, and crashed the International Space Station. Luckily, it was in simulator, but I actually did stuff like that for NASA, using this new technology called virtual reality, where you had to wear things on your head. And they would measure your brain, and you'd see, and wow, it was like reality, but not reality. It was like a virtual reality. Isn't that cool? Way back before there was such a thing. I'm talking 91, 92. Holy smoke. So anyways, there's my journey in this world. And so I bring some of the good, the bad, and the ugly with me, as do you. But I think the common thread here is we probably have an entrepreneurial spirit, which allows us to say, yeah, most people fail, but I can be successful here. The cool thing is, if most people fail and some people are successful, guess what? There's more than enough money to go around it. If you are successful, what is required? A little bit of knowledge and skill. Yep, sure. I don't think you have to be a rocket surgeon. But the thing is, you do need patience and discipline, and you do need to do things like plan in advance. So today we're going to carry out today's trades and look for tomorrow's trades. That's what we do. So ask questions, get involved, let me know how it can help. Simple as that. Besides the 6,000 videos associated with my work on YouTube, if you look at the description below, there's a link to my book, Strategic and Tactical Forex Trading. Below, you'll also see a link in the description below to fxbootcamp.com, where you get for $88, you get 65 hours of very hardcore, non-fluff, university quality education on how to trade Forex. Swing trading, day trading, monetary policy of central banks, macroeconomics, trader psychology, scalping, spot trading, swing trading. It's all there, man. And then, of course, a link to a trustworthy, ethical foreign exchange brokerage firm that has a business model that relies on your success. They're hoping that you succeed, and they value your education. And here we all is. So if you're looking for brokers, you're thinking, hey, I want a fast execution speed. They have it. I want narrow spreads. They have it. You want huge swaps. They have it. World-class customer service. They have it. What I like is I don't think they trade against you. That says a lot right then and there. Many, many years ago, I received an email from one of the largest, probably the largest foreign exchange broker in the world. And the regulatory agency that did oversight on them found that there was an algo in their execution server that would slip against you, which means they promised you, let's say, 1 pip spread, but you kind of paid 1.5 in and 1.5 out, and then all of a sudden you're like, dude, this is way more than what was promised. So the regulatory agency said, well, that's very misleading, so you need to send an email and let everybody know what changes you've made to your algorithm. And so I got this email saying not only are they going to slip against me, they're going to slip for me once in a while, which means maybe I'll get a slightly better price than what was indicated. Isn't that funny? You're like, wait, what? What? You've now been forced to A, slip on purpose, and B, not just against me? I mean, you have to laugh. You're like, what? How come they weren't put out of business? Well, eventually the market put them out of business, but. So, again, if you like ethics and you like a quality service provider, I do recommend tradersway.com. Give them a try. If you open up a demo account, maybe they'll earn your loyalty and respect like they earn mine. Here's our view of the world. What are you trading? Let's take a close look. Euro, pound, Aussie, or CAD. Most people are on Euro. Okay, great. So that's been doing good for a while. If you remember, Euro was strong for quite some time, a few weeks. And the whole time I said, hey, man, I'm still a bear. I'm still a bear. I'm just waiting. Still a bear. Still a bear. So good. Now everyone's, looks like most people are on that clue train. Now pound is strong and I got to wait. The big thing there is they have rampant inflation. And the Bank of England will probably have to raise interest rates much higher than people had originally thought. Simon says, will we get bad news on PMI and stuff? I don't think that's even the big question. So whatever, let the PMIs come out. See, remember, PMI is news. PMI is part of the news flow, and it goes into your fundamental models. But I already have biases set on my fundamental models. And so therefore, the only thing that would matter is, will the PMIs be radically better? Will we learn something significant? Yeah, probably not. What'll happen is it'll come out. It'll be, it'll either be about what is expected or bad, which we also expect. So, hey, man, it's all good. So it goes into my model, but I've already made fundamental decisions. Okay. Hey, Wayne, does the Swiss National Bank intervene when the Swissy is stronger to the euro or weaker? Well, what they want is a cheap Swiss franc. In particular to the euro, because their largest trading partner by far is Europe. So if Swiss franc is strong, Europeans can't afford Swiss products or services. Banking, cuckoo clocks, Rolexes, etc. Okay, so what else is going on? Aussie is continuing its rebound from the horrible news from China not that long ago. Kiwi's still trying to figure it out. Pound is reacting to the high inflation and the idea of higher interest rates there. CAD is rebounding, which makes me feel really good. And I'm hoping that gives direction at some point to oil, but or other commodities. Food, I think, is going to be in demand. Energy, I think, is going to be in demand. And yen is being impacted by more and more yield curve control. But right now, the base, what I'm looking at is buying Swissy, buying dollar. So then I have to say, well, if I'm going to buy these two, what am I going to sell? Euro and maybe Kiwi? Okay. When yen is weak, maybe CAD yen, maybe even Aussie yen. Maybe even pound yen, for crying out loud. The problem is I'm fundamentally bearish on pound. So I see it's up, which is fine, but I'm thinking down. So they might not completely offset each other, but what is best, what has less risk associated with it, is wait for pound to weaken and then go ahead and sell pound dollar, pound Swissy. So right now, the best one are Euro trades still. You got to remember, Euro was going up for weeks, and I said, wait for the sell, wait for the sell, wait for the sell, wait for the sell, wait for the sell. We are now about 100 pips away from my target on euro dollar. We're getting closer and closer and closer. Right now, I have about 400 pips profit from the entry. If you're new to this channel, this is just a basic swing trade. In fact, the swing trading group came up with that trade plan. A double top, lower high, double top, lower low, lower high at a weekly M4, which is a counter trend into the prevailing trend. So it's a counter trend in the sense that for almost a month, 3 weeks, maybe 3 to 4 weeks, this was up. Good. Because the trend is down. So here's the plan. Lower low, lower high, lower low. Cool, man. That's what we do. That's what we do, all right, Adam? That's what we do. All right, so what else? What else could we do? Euro Swissy? This is the one we're just talking about with intervention. So if you are bearish and you see a bullish move, and by the way, check that out. This is textbook. This is what we call an OOP. Okay? You hit this on a Tuesday, you should expect a pullback, probably to this area in here. Okay, once again, if you don't know what this is, pay the $88 and join FX Bootcamp and get knowledgeable. Why would you hold back? Wayne, I don't like paying money for education. I prefer to just figure it out on my own. That's what an 8-year-old does. Have you ever seen how stubborn children are? They just are uncoachable. It's like herding cats. No, I want to figure it out on my own. Someone mature says, why would I waste my time and money reinventing the wheel? What could I do to get leverage to speed up the education process so I don't have to keep smashing my head against a wall? Maybe you don't have $88. I can't help you, son. Okay. So anywho, this is all pretty standard. So in this situation, by the way, we talked about this, but maybe not this pair, but we did talk about it last night in the day trading group, a similar situation. Okay. So anywho, what you want to get to is you have some sort of directional bias. And in periods of, increased risk, and that's what that is, by the way. It's not just weekly. We basically are kicking off the monthly. So even if it goes down one more time, we're in a situation where we're very close to the target. So really, sort of, if it's making higher highs and higher lows, you should be out. and kind of setting up the next trade. Well, but the fundamentals haven't changed, just technicals have changed, and what happens is people take profit. So this green zone is where we assume people take profit. Look at this. Somebody had an exit order there, not a buy order. That's an exit order. Well, technically it is a buy order for the seller. Okay? And same thing occurred here. And what this is showing you is it's not necessarily bulls buying, but bears exiting. And a bullish trade would be this one. We call this a role reversal, higher high. So someone that was short this and concerned about the profit-taking zone here and another test here certainly has been taken out of this trade. Okay? You know what I mean? Question here, wouldn't you continue to hold your euro dollar position considering further rise in interest rates? Well, that's fundamental, but there's also technical. Okay? You have to have a healthy dose of both. So if you were just going to be like a buy and hold person, then yeah, you would hold until the central bank changes its policy from raising interest rates to lowering interest rates. Well, okay. But you can see there are plenty of times. So there's many ways to manage this, guys. There isn't one way. Okay? When you get here, it's technically bearish. Okay? Technically bearish here. Okay? Double top and then the lower low. And then these pullbacks are where you should be looking to sell. Pullbacks, look to sell. Pullbacks, look to sell. Pullback, look to sell. Pullback, look to sell. Now, one person may sort of make individual trades. Trade, get knocked out, trade, get knocked out, trade, get knocked out, trade, and then on the next move kind of get knocked out on the little pullback area. So in my book, Strategic and Tactical Forex Trading, we talk about using the 2155 for speed and direction. In particular, what we're talking about is direction. So at that point, you are technically a bear. Now in the book, I say you use the 5/8 to sell, exit, okay? Sell, exit, sell, exit, sell, exit, sell, exit, sell, exit, sell, and I haven't exited yet. That is one way to do it. Okay? That's strategic and tactical. The 5/8, these little dots here, are tactical. In, out, in, out, in, out. But the strategy is the same. Clear Fallujah, kick down a bunch of doors. These are doors. Kick it down, remove the threat. Kick it down, remove the threat. Kick it down, remove the threat. But the strategy is clear the whole city. Okay? Now, someone else could come along and say, well, Wayne, couldn't you just sell it and 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 sell it? Yeah, you could. It's much easier in hindsight. But yeah, for sure. And you're like, well, I'm technically building a position into a fundamental trend. Well, I also teach that. We call that a portfolio. Oh, for show. Oh, faux show. Okay? That's, yeah. Could you do it that way? Yeah, I hope you do, in fact. And then there's a myriad of other little tiny trades inside of all of these trades, whether they're swing trades, position trades. So, for example, you could do things like, how do we do this? Position trading, bearish bias. Okay, look at that. So if you were already technically a bear, let's say here, or fundamentally a bear, these little pink boxes are little sell zones. And they're forward. So this is September. So it's not backward looking, it's forward looking. It's a leading indicator. So when this was falling and making a lower low, it said, hey, since you're a bear, this is a good place to sell. Okay? And then it made a lower low and it said, hey man, this is a good place to sell. Then it made a lower low and it said, hey man, this is a good place to sell. Then it made a lower low and it said, this is a good place to sell. Then it made a lower low. Okay, look. Oh my God, it took 3 months of sideways action. Then it made a lower low and it said, hey man, this is a good place to sell. Right? Good place to sell. Good place to sell. Good place to sell. Here, look, I sold it in a good place to sell. Could you trade it that way? Yeah. Yeah, you could. Okay? You could take that further and say, I don't like to wait 3 months for trades. I want to get like new setups every week. Okay, so those are also swing trades. So up, consolidation. Look, good place to sell. Okay. Okay. Little bit noisier, isn't it? Yeah, because sometimes there's step ups, but you're a bear, so you don't want those. Then there's step downs, and those are things you do want. So you're like, well, that's a little bit noisier. Well, then you can drop into the daily, and it's even noisier. You can look at a confluence of all these things. Okay? This is where bulls exit and bears enter. Look at all these great places to sell. Okay? These are all great places to sell. And what is this? What is this green? You're like, well, Wayne, this green didn't do anything. Well, it stopped the fall for a couple of days, but we are riding the trend. But it's also a place where bears would likely start to think about taking profit. Is that valuable information? Yeah, it's valuable information. The down may slow or stop, or even if there's lots of profit taking. So whoever sold here, 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 okay, if they stay in, you're going to think, well, where are they going to sell again? Here, here, or here? Or you might say, well, somebody sold it here, somebody sold it here, somebody sold it here, somebody sold it here, and now we're at an obvious profit target. I think this person has enough pips where they're like, you know what, give me some pips. And these guys might have enough pips. Give me some pips. Okay? Because right now, that's 400 pips. So you could exit technically, but fundamentally very little has changed, right? So now you can say, well, I'm going to wait for the next rollover at resistance. So you can say, well, where's resistance? And you start using price. Or you can use market forces, and that's what this is. It's all market-based. So what I could do is I could take profit and put another trade here or another trade up there. Okay? Exit at 99, sell it again at parity. Which one's right? Dude, they're all right. That's what I'm trying to tell you. There isn't one right way. What's important is you know that when to make decisions and what the decision actually is. Okay? Okay? Cool. Okay? There's no holy grail. It's just lots of decision making. Thank you, Barry. So, like in an example of Euro Swissy, I look at this chart, okay, and I say, I'm a bear. But my decision could be, let's do it this way. If I'm following this moving average into the future, then check this out. I might have to let Euro Swissy rise for 2 more days and maybe sell in here on Thursday or Friday. And by the way, if I continued these green zones where are profit-taking zones, I'm sure you'll find a lot of these are green zones, huh? They sold, took profit. Sold, took profit. Sold, took profit. Okay? Sold, not as high, took profit. And so somewhere in the next 2, 3, 4 days, I'll probably look to sell. So I have a fundamental bias. I'm bearish, eh? But then I use technical analysis and I say, well, I don't sell lower lows. I sell lower highs. Where's the next lower high? Okay? So I spent a lot of time teaching you why euro would be weak or why Swiss franc would be strong so that you can make the decision and then confirm using technical analysis. Okay? So if I was using the daily chart and using the standard setup in my book, not only am I short, but I am still short. Because remember what the book says. 2155 is down, so you're bearish, okay? So you're a bear. How do I read this chart is what I'm saying. Okay, technically you're a bear. There's nothing else you could be. Okay? The second thing is you're bearish and aggressive. Okay, so that sets your tone, your sentiment. And now using tactics, you take profit here, so you exited, and you re-entered here. You took profit here, you re-entered here. And you're still short until that 5-8 crosses up. So maybe tomorrow you exit, and then 2 days later you sell again. But of course, you could just stay short and just keep adding every time the 5-8 crosses down, as long as the 21 is below the 55 or as long as price is below the 21. All variations, they're all correct. They're correct because you analyzed and you made a decision. Okay? One person says they use 18 and 40 for daily. Cool. That'll work. So what I want to see next is I want to see the pound go from strong to weak. Okay? Oops, before we go there, let's try to figure out why some of these moves are occurring. Okay? On the first day of August, my true love gave to me. Okay? We were bearish, but it had been rising. But this circle here on the first day of the month is the best selling price you could expect for the month as a trend trader. And if you sold there, this was your target. So the world, according to technical analysis, says that was a perfect trade and we're now done. Okay, the rest is just going to be amateur traders trading against each other. It's just a bloody mess. The trade's over. It's done. What do you want to do today? Nothing. It's over. You see? Sell, exit. Kind of like this. You're like, well, Wayne, it might come down. Yeah, okay, well, you should be out of that trade. Now you just kind of day trade it down and see if it can go a little further. But the swing trade by definition is done. Squeeze the lemons out of this. I love this, sir. Hey, man, if you haven't joined FX Bootcamp, join right now. $88 a year. I'm telling you, it's stupid cheap. Okay? Stupid cheap, which means one of two things is true. One, I'm stupid for selling it for so cheap, or you're stupid for not signing up. One of us is stupid. Okay. So yeah, look at that pound Aussie, huh? There's the perfect sell price. There's the exit price. What more do you need? This is the perfect sell price, and we almost hit it. We just missed it by, a half a day. Hey, man, don't expect perfection. Okay? If you want perfection, sign up for someone else's trading course that just looks backwards all day. Tells you what you could have done. Those are just those that's in the course, that's in the book. I've been preaching this every day for 20 years. Dude. Okay. Here's a highly recommended sell trade. We've also just hit the target. It's done. It's over. Well, what do I do tomorrow? Spend your money. Take your kids out for ice cream. Okay, there's the perfect entry. Again, we know this in advance. Then you're like, well, Wayne, how do you know to sell that? Actually, that's not the perfect entry. That's an R. I apologize for that. But anyways, Wayne, how do you know to sell that? Well, you have a fundamental bias based on facts. So pound CAD is going up and you're like, yeah, I want to sell it. You might have sold it here and took a small loss. Wait, Wayne, you lose money trading? Uh-huh. And then we get back into the game. Okay? So the next part to recognize is we hit the exact price, which would be the logical conservative target for the month of August. We've hit it and it's stopped. Okay? Mujib says, hey, you took the final decision to enter on a 15-minute chart, or was it a higher time frame? Higher time frames are strategic only. Okay? So 15-minute, 5-minute would be a typical decision for actually entering or exiting. Okay? That's the separation between strategic and tactical. My pleasure. Yeah, I don't trade on a 4-hour chart. I plan on a 4-hour chart. So like to maybe make a better example of that, let's say I want to sell at the daily 21 EMA. I got to go through this process. Okay? First of all, I have to say, well, where is the 21 EMA? And right now it's at the top of the channel. And then I got to project that forward because it's a moving target. And it just happens to be the top of the channel. So I'm going to push it forward and I'm going to pull it in a little bit. Okay? And so you could say, well, my plan now will be to have it come up around what, 154, 155 area. So we'll say 154, 155. If it's 155, I'll have a more conservative target. If it's 154, I'll have a more aggressive target. And look at that. I just planned out probably next week. But by next week, I mean, I might sell this on Thursday or Friday. And then people will log in on Monday or Tuesday and they're like, Wayne, so what's the plan? What's going on? What are we trading? Oh, I'm taking profit on my pound CAD short. That's what I'll probably be saying Tuesday or Wednesday of next week. And they're like, well, when did you trade it? Thursday, Friday, or Sunday. When did you plan it? Tuesday. I'm telling you, when you roll in and you're trying to figure things out and you don't understand that people had this planned 3 or 4 weeks in advance, that's your disconnect. See, there were orders here, guys. That's why all of these bounce at very specific prices, and these bounce pretty quickly. What made them bounce? Other traders, in this case, the few that are actually profitable. I want you to think about that. If most retail traders lose money, what kind of behavior does a professional trader that makes money? What kind of behavior do they have? Well, they sold it up high earlier in the month and they had a limit order here because that was their plan. Fundamentals gave them direction. Technicals gave them confirmation. Technicals gave them the entry. Technicals gave them the exit. And technicals will give them the re-entry. An amateur show up. Okay? And they're like, so what are we doing today? Well, I'm going to take profit and you're going to buy it from me. We call that a liquidity event. So someone probably sold here and now it's going to go this way and then they'll lose today, maybe they'll lose tomorrow, then they'll buy it here and then I'll start selling. And what'll happen? Those who bought it up there bought it way too late. They didn't understand the counter trend. And then they give it back. And meanwhile, it was just something I planned 3 days earlier. This is why I said yesterday, if you only have like an hour or two a week, you can be a successful Forex trader. So if you have kids, you have a job, you're taking care of grandma or grandpa, you are busy. You can do this. You can still do this. Okay? Even if you are at max, you can sleep 2 hours less a week. You're already tired. Okay? If you only sleep 35 hours a week, you'll do fine on 33. But you're going to love the money. Love that money. Whoop, whoop. Okay? Or at least the opportunity to get out of the situation or money to make the situation easier. Money to get help. Money to affect help. You're like, look, I want to help, but I don't have any time. Here's some money. Okay, cool. Going back to here, this is pound Swissy. And I don't know if you remember me doing this, but I was making a point where fundamentally I'm expecting a move like this, fundamentally. We were at the lower low and I said, guess what? And I started going here, 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 here. What I was saying is you can't sell low. You can only sell high at resistance. So I said, well, let's just go through an exercise. And I did this on multiple time frames. And I'm like, let's find the resistance. Where do you think the resistance is? And we start messing around. And I'm like, well, once you add them all up, there clearly seems to be some resistance in there. You could probably take this further and you can continue the exercise. That looks like resistance. That looks like resistance. Get another one in there. That looks like resistance. And if you're on smaller time frames, you'll find even more, right? So one of the things you could do today is say, wow, we're getting kind of interesting now. It's really high. It consolidated for days. And now it's making a higher high on a small time frame. Cool. Now, what do you think you should do if you're a bear? Now, some of you might say, well, you should be a bull here. Okay, well, then you're not fundamentally driven. That's perfectly fine. And yes, you can start buying dips. You can do that. That's fine. What a bear would do is say, well, now that we're through and we're up into resistance, if it does something like this, I have permission to engage to the downside. Yeah, Darko. And by the way, Darko, the 20 grand is in your account. May the pips be with you. Go get them. YouTube says, I'm on episode 3 of the economics class. It's very good. Thanks. My pleasure. I'm very passionate about macroeconomics. Okay. So remember, guys, it's not that you sell. It's that you sell because you're a bear and you're at resistance and you get a reversal pattern, and you can take a shot here, put a stop here, and praying never hurts. Now, if it does one of these things on you, you take a break. And you wait. That's right, Darko. Anywho, there you go. It's beautiful, isn't it, Darko? Let me go check. Oh my God. Yeah. All right, be wise, man. People are watching. Time to shine. People are watching. Game on, Bubba. Okay. Let's do gold, oil, and Bitcoin. Okay. So, I don't know if you could read my chart, but as Bitcoin was rising, okay, higher high, higher low, okay. This is new higher high. What a bullish technician would expect is this. This is what should have happened. The way my chart is set up is it expects, and I guess I could do it this way, this. So you have to recognize price action from market forces. Now, price action will always reverse eventually market forces because something fundamentally has changed. But you can have price going up, and this takes a while. I want you to think about this. Price is going up, but it doesn't mean people are buying. Now, obviously some people are buying, but it doesn't mean the entire market is buying. Price going up is not a bias. Okay? So here's the interesting thing. Now that that price action has failed, it's failed at the top of the bearish channel. And now we have a lower low. So bulls, let's say you're a bull on this and you really want Bitcoin to go up. You're in a danger zone now because the probability of this reverting back to the mean is significantly greater now than it recently was. Your risk, bulls, are you listening? If you're bullish here, your risk is increased exponentially. And that's what this chart says. And if you're like, ooh, I don't like the idea of exponentially increasing risk, then if you have profit, maybe you should consider doing something. I don't know. I don't know what your decision is. Get out of it all, get out of some. I don't know. I don't know if you bought Bitcoin at $100. I was doing some calculations, when you hear these guys that like, oh, they're Bitcoin traders and they made $100 million. And when you start looking at that, you're like, well, the only way they made $100 million is they put like $7,000 into Bitcoin when it was $52. And of course, some people did it when it was $5, right? But I'm like, I don't think I even heard of Bitcoin until it was, $500, and then it wasn't even really interesting till $1,000. But I remember even then, it was difficult to even buy a Bitcoin at $1,000. Where did you go? From whom? Right? So like these guys were really leading edge. Buying it at 20 and hoping it goes to 100. Well, how much are you buying? Are you going to make $100 million? Probably not, right? So it's kind of interesting. So here we are at 20. Just be careful. I'm not saying it can't go up. And in fact, if it was going to go up, and in fact, I think it'll go up a little bit, it's going to go off this line. The exponential risk for the bulls, however, is this is what the probability suggested. And that's what I measured back in, what is it, the end of August? At the end of June, dude. 2 months ago, this is set up. And of course, what I've been preaching is the third week of August. And now we're in the third week of August. We've had a massively bearish day at the price I would expect on the week I expected. And this could get really ugly if you're a bull. So just be careful if you're a bull. Bears, have at it. I'm not predicting it's going down. I'm using statistical analysis of a data set. Okay. I'm looking at the slope, which is rise over run. Okay. But to get that, I need the mean over time. And then I look at the slope of the mean. And then I look at the variance. How far does price over this time deviate away from and gravitate back toward the mean? We call that variance. And then I take the square root of the variance to get a deviation, predicting in the future. So again, this is not looking at anything fundamental. It's not even looking at anything technical. This is statistical analysis of a data set. This is a data sample. Statistics don't understand that this is Bitcoin or US dollar. It doesn't matter. So once again, I'm like, dude, this is not an opinion. I'm not making an opinion. That's statistical analysis of the data set. This is where, you get the square root of the variance is right in this area, which we calculated 2 months ago. So statistically, be careful. And then when I do seasonality, I say this particular week, right? Get ready for new volume and volatility. Oh my God, now it hit, but pretty much off that price. So bulls, be careful. Statistically, your risk is increased. Now, yes, it could go up and break the variance, but then that wouldn't be a non-standard deviation. That's not what has been happening. That would be an outlier. It could happen and it will happen at some point. So if you believe that this is the right price and time to break the standard deviation, then by all means, you might be right. You know it better than me. You're an expert on this. You've been studying it. You know everything about it. Awesome. Then do it. Yeah, Darko, yeah. The size of the account doesn't matter, but now it is OPM, right? Other people's money. OPM. So you have to trade develop a track record of trading in a way that's appropriate for the other people. That's what, can you provide a service? Okay? So that's what you're gunning for. Thanks, Claybo. Okay. Oil has fallen from 122 all the way to 88. Now it was a bull the whole time. And Darko, don't worry about bringing in more investors. I don't need more investors. Don't worry about it. Don't worry about it. Maybe later. Forget about it. Forget about it. So anyway, so here we are. And at some point, and there are many different tools I have here, in which you can, change your aggression or your bias. So now that we've gone from 91 today on our way to 95, it's kind of late to be buying. Okay? Once again, just because it's up today doesn't mean you become a bull. Okay? Bulls, let me do this in yellow, right? Like this, for example, this move yesterday off of our support zones. Might have been more interesting, but aggressive. But then if you look at this, that would have been more interesting earlier today. Like you would have had that trade planned all out for Asia. And then, right? And now that it's moving, now we're at resistance. So like an amateur would start buying now because it has been up. Yeah, Darko, those are your decisions. Okay? So don't send me a bunch of emails like, should I do this and should I do that? And I'm not saying you are, but I'm just like, you need to be responsible for the money. You're a portfolio manager. Manage it. So if you want to wait a couple of weeks for the next setup, that's your call. Okay? For sure. That's your job. Because you can say, well, fundamentally, the biases are there, but technically these are out of position. That's your job. Okay. My bigger concerns are your risk profile and drawdowns, right? So I don't want to see large lot sizes. I don't want to see a big negative, right? That kind of stuff. Okay. Anywho. Okay. So at what point do you believe this will have a sustainable run north? Well, that's your technical analysis. Down, up, okay, down, At what point is this a base? And then at what point does it become a bullish trend? Yeah, I trust you, Darko. Okay, so check that out, yo. At what point do you engage? Well, now that we're in here, I think this is not a good price. But you might have direction now. You might say, well, Wayne, I think that's the direction now. Cool. So when do you engage is the next question. Well, okay, either at this price or at this price. And you're like, but Wayne, it's the same price as where I am now. Yeah, but the risk profile is radically different. Instead of buying it back up near parity, or resistance, you're buying it when resistance has become support. You can only buy low. So only an amateur in my mind would say, okay, I'll do it this way. Only an amateur would say, we went from 86 to 94, and now I want to buy. By no definition is this low. And the only thing bulls can do is buy low at support. Okay? And by low, I don't mean lower low. So it's really much more definitional. You can only buy a higher low at support. So you could argue this one, or maybe you can argue this one. Whatever. You need to make the decision, but there's no way that that is low. But somewhere around here could be a low, and then a higher high. Well, Wayne, what if it doesn't pull back? Why would I care? You wouldn't trade it until it pulls back, so who cares? Okay, you can either be patient and disciplined, or you'll be broke. That's it. I'm done. I'm spent. I'm still preparing tomorrow's lecture for the oil trading course. We are going to go over the contractual agreements as if you were going to negotiate with Kazakhstan for drilling oil. That would be you negotiating a deal with Kazakhstan. Well, what about ExxonMobil? Well, what if they find you're a farmer in the United States? How is the U.S. different from the rest of the world in as far as laws? And what if you strike a deal like you got land with oil under it, but you want someone else to shoot your land, right? That means, prove that the oil is down there, right? Shoot seismic. And then you want someone else to drill a test well. And then you want someone else to build the infrastructure and pump the oil out of it. What kind of deal is that? What kind of terms? Who pays for this? Who pays for that? What if there's a breach? There's a lot to discuss. And then I also want to do a little bit on compliance. Now, they're not environmental compliance, but in this sense, compliance that impacts valuations. Because remember, we have investors involved, we have banks involved, and so little things like, well, what is your claim worth? What are the legal definitions of what you claim you have? So on and so forth. There's some pretty interesting topics in there. Yes, it's a little esoteric, but remember, I'm not just making a bunch of traders that can buy low and sell high for oil, but I'm trying to make you an expert in the energy complex. So when I'm talking about nat gas, you don't think of it as oil. Okay? So one of the things we talked about last night was the convergence of European and American prices. Why it happens. Not just some rule, but why? Why does it move? Why? Well, first of all, if oil globally is roughly the same, there's Brent and then there's WTI, and there's a spread between the two, so they're not even perfect. So you could trade the spread between the two. But we were talking about nat gas and trading the spread. But what mechanical malfunction has created a wider spread than normal? And what would create the spread to narrow and maybe narrow dramatically? And that could be a trade, that could be a position, or at least the logic behind it. I mean, terribly interesting in my opinion. I like markets, I like trading, I'm an entrepreneur, I like deal making, I like to understand where the big money is and how the filthy stinking rich can possibly get filthy stinking richer. How does a $1 billion hedge fund make a $1 billion profit? Quickly. That's interesting, right? So anyways, there's deals out there. And anyways, you have to have a pretty good understanding of the market, really, everything about the market if you're going to truly be an expert. So we're going to talk about international law and U.S. domestic law and compliance and valuations and all that kind of stuff because it'll be important to investing. So that's what we're going to cover tomorrow. Hey man, that course is $250 and I think we're 12 hours into it now. 12 hours into this and we have many more hours to go. Okay. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being part of this community. You make the world a better place. Thank you for all you do. Cheers.